morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. And good morning, Denis. Happy Holi in advance, but doesn't seem like the color will be anything but red.
Yep, and Holi's come early on the Lal Street, it looks like. Aside from that, the fact that the global markets on almost a daily basis is giving out some form of a shock. Now, this time around over the weekend, all eyes were out on what came out of the OPEC meet in terms of pricing stability, and all that we've got from it has been instability because we're in the midst of a full-blown price war between the two big nations out there, Saudi Arabia as well as Russia. An intraday chart of this would be much more prudent right now, 24% lower for crude oil prices. Probably, this is going to play out in a bigger fashion with regards to what happens to energy-related stocks in the US equity markets, though it may be the silver lining that India has wanted. But aside from that, the rest of the globe is not going to take this too well.
Yeah, and of course it's showing in the way the equity markets are reacting. By the way, the Dow futures are down about 5%. I mean, they hit that limit early morning, and keep in mind, as a result of that, the rest of the Asian pack under pressure and a serious strain, and the SGX Nifty currently showing a downtick of about 300 odd points. Let's see if this worsens. It's great to get in a couple of very eminent voices to try and talk about both these situations. One, what's happening to crude prices and the resultant impact, and how worse can it get, if it's possible to predict that at all. And then the problem in the credit markets in the US, arguably the world over, and it'll be important to analyze that as well. So first, start off with crude. The prices have hit a 29-year low as the OPEC members squabble lower production and prices. And while, as Denis said, it's good news for consumers like India, for now, the uncertainty will plague almost everybody. Let's get in Peter McGuire to speak about his thoughts on what this means. He's the Chief Executive Officer at XM.com. Peter, good morning. Thanks for joining in. This is bad, yes. Is it even possible to predict how worse can it get?
Well, good morning, Neeraj. I think that's the $64 million question. We haven't seen numbers like this since 1991, and I remember that distinctly. When that Desert Storm, I've never seen markets fall as heavily or as I suppose violently in a matter of days as what we're seeing now. US dollar index at 95.2. Everything's just smashed to the downside, and crude's taking it well and truly, showing what that you've got the Saudi issues and you've got what Russia's playing. So there's probably further downside yet. It'll bounce, but that just gives traders an indication that the market hasn't hit bottom yet.
Yeah, that's my question really, Peter. Is it possible to predict? Maybe not down to the exact dollar, but would you reckon that even after this plunge, the next few days trajectory is lower from where we are right now?
I think it'll probably hedge. You've got the rest of the day to go. I mean, we're waiting for Middle East to wake up. You guys are just starting your breakfast show in Mumbai. You've got the Middle East, which is going to be fascinating once it hits the UAE and then Saudi, and then roll it across to Russia, and then you've got the Euro day, UK, and then we hit, the big boys tonight in the US. So I think it'll be softer as the day wears on, and it could bounce, but you've got the Dow down. I'm seeing that down 1230. It's an enormous number when you're thinking about what can happen over the next matter of hours. So it's going to be violent trading, Neeraj, and these are unheralded times. So I think it's hard to pull a number, but NYMEX crude's running at $30.08 at the moment, down 27%. I think there's further softness yet.
Stay on with us, Peter. Geoffrey Denis, independent emerging market commentator, is also joining us right now on the phone line from California. Geoffrey, thanks very much for taking out the time.
Thank you.
Let's talk a little bit more about the implications that this is going to have on overall global sentiment. I mean, people are talking about crude oil prices that could probably slump to levels that we'd seen during the financial crisis. And if that happens, it's not good news for equity markets across the globe. And how does this pan out for US? Because US grade and other, grade oil prices have already come off by 35%.
Yes, well, the drop in oil prices is a direct hit, of course, for the U.S. economy now because of all the increase in output in the U.S. economy, and it will lead to a drop in investment in the oil sector, which is going to be a further hit to activity levels in the U.S. economy. But generally, I think the way you have to look at the oil price decline is it's a little bit reflective of what I think is developing here, which is almost certainly a global recession on the back of the disruption to activity from the coronavirus. But I think it's a development with a difference, and that is that this plunge in oil prices, which appears to be by far the major factor triggering these huge losses in Asia so far today, and also the drop in the futures in the U.S. This is both a supply and a demand problem. Demand is sliding because of the global economy, and the supply side is, of course, as everybody knows, OPEC couldn't get a deal, couldn't get Russia to agree to cut output. So I think it's probably overshooting the oil price, that is, and it's entirely possible you'll get some sort of new attempt by OPEC to stabilize output over the weeks ahead, especially if we plunge towards yet lower lows. But I still believe equities have got further to fall because I just don't think you've seen all the bad news yet about the global economy by any means at all.
You know, we had the Fed cutting rates by 50 basis points. And now, with the yields dropping below 1, in fact, now at 0.5, there is still that section of the market that believes on March 18, when the Fed meets again, the probability of another cut is much higher this time. Do you think that they have that much ammunition to go ahead and tackle this issue now that the yields have come down to about 0.5%?
Well, I think they do, clearly, because in some sense, in certain parts of the curve is inverted now. And I think what the truly dramatic drop in bond yields is giving you is a green light for the Fed to move rates again. So I think it's just a matter of how much they move in the meeting next week, not this coming week, but the week after. I would prefer to see the Fed not using a lot of ammunition here by, say, cutting by 75 basis points, which is what I've heard some commentary on. I think it's more likely perhaps the Fed moves by 25 or maybe by another 50. Because I was critical of the Fed moving when it did early last week, because I think you need to leave some ammunition later for when you really do slide into recession. And so I don't want the market to drag the Fed too low. But no doubt at all, it would be a bitter disappointment for the market, I think, if they didn't cut rates next week. I just think it'll probably be a fairly modest cut. And yet at the end of the day, in this extraordinary environment here of the impact on activity of the coronavirus, it's not actually remotely clear why lower rates will help. It'll help sentiment, it'll help the mortgage market, it'll help refinancing activity, but it isn't going to really allow people who don't want to go to the cinema or restaurants because they're worried about the virus. They're not going to react to a lower interest rate. So it's not clear it's the right measure anyway, but I think the market is dragging the Fed to reducing rates again. I just hope they don't cut them too far.
We'll get to Peter, but in just a moment too. But Jeff, just one question. Last Monday when you were with us, you mentioned, and I'm glad, I hope people took notice of that investors should try and play by the recession playbook. My question is this. Emerging markets would be net beneficiaries in the slightly medium term of falling crude prices, and this looks like it's here to stay. Would you continue playing by that playbook, and therefore would you believe that equities by and large have still some more room to go? Whether developed or emerging is another question.
I think there's no question equity markets have got further to fall. I'm assuming peak to trough, the U.S. market is going to go down at least 20%. Now, it may go down a lot tomorrow. As of Friday night's close, it was down about 12.5%. 20% is a reasonable recession sort of move in equity markets. I don't think this is anything like as serious as the 2008 global financial crisis. Hopefully it's not anyway. We'll see about that. And I don't think things were as overboard as they were during the tech bubble in 2000. So I don't think you need to see those huge declines you had then. But if this is a recession, I think markets do go lower, and I still think it's way too early to start thinking about buying. Now, what's helping EM here? A few things helping EM here. Number one is China is doing better in terms of the market. And, of course, as you know, the speed of the pace of the new cases of the virus in China has slowed right down. That at the margin is probably helping EM. What's helping EM as well is the dollar's quite weak now. It's gone from 109, 110 against the euro to 113, 114. That will help emerging. And lower oil prices, as you say, at the margin are a benefit for a number of emerging markets. But at the end of the day, if you get a global recession and equities come down, it is very hard for emerging markets to outperform, because typically, what investors do is they pull away from risk and they go towards safe havens. So I don't think EM is going to outperform here, but I think we're getting a little bit of help from one or two factors. But my main message here is we're going down again further, I think, on the equity side, at least another 7 to 10% in the US, and I think EM is going down as well.
Jeff, thanks very much for joining us this morning. Really appreciate you taking out the time.
Thank you.
Peter, one last question to you as well. Saudi Arabia has got a capacity of producing 12 million barrels a day. They said that they're going to ramp up productions to about 10.5 million barrels right now. Do you expect any retaliatory measure from Russia as well? And if they do take it up to max capacity, how much lower can the prices of crude oil go?
Gee, I mean, there's so many different moving parts there. We've got a relationship naturally that has been built over the matter of probably many, many years, Russia and Saudi. Is this the start of something far more perverse, that there is a relationship breakdown between the two parties? That's only just sheer speculation, but there'd be a number of traders, no doubt, taking that into consideration. MBS, what's happening in Saudi? You've got that issue that they had last Friday as far as the royal family and treason. So it just seems to be many different parts are playing out here. Saudi's got the firepower to certainly push prices a lot lower. They're the elephant in the room. And let's just see whether, what Russia's prepared to do. They might, toe the line. It all plays very favourably also in some ways for US. So the consumer wins, and that's going to be a big benefit, I think, over the next matter of months. If prices stay down at these sort of $35 to $40 levels, that's going to be a win-win to not worry about the demand destruction so much, but from a consumer standpoint, more dollars as far as spending power.
Right, got that. These are very uncertain times indeed. Peter, thanks very much for joining us this morning.
Thank you.
All right, global opinion coming in there. Definitely not the end of the selling route for the global equities, and this just adds more salt to injury. Let's also bring in Avinash Gorakshakar of Profitmart Securities. He's joining us right now on the show. Avinash, good morning to you. It's going to sound like the same question that you've answered repeatedly, but every single day you show up, you feel that the things might start to improve a bit, or you've started to make that bottom on the equity markets, and then you have a day where you've got another 3% correction. Do you just sit on cash, be secure?
No, I think, Devina, in the current scenario, it makes sense to be on the fence for some more time. Considering the fact that global headlines continue to be very volatile, and I think now the new development on the oil front is definitely not positive. In fact, a 25 to 30% drop in crude price is definitely going to be extremely bad for energy companies globally and domestic companies here. The only silver line which I would believe is companies which actually consume crude oil as a raw material are definitely going to benefit over the next 1 or 2 quarters. And I think within that basket you could also include companies which are B2C companies, specifically paint companies and consumer discretionary companies, which actually have crude as a major raw material. So I think that factor has to play out. But I think the markets here would now be looking very closely as to what RBI does with a massive kind of Fed interest rate coming in already. Markets are now factoring in the fact that the coming policy could see a very significant rate cut. Somewhere, I think down the line possibly could be to revive industry here. And I think hopefully, once the market settles down globally, only then we could see some sort of recovery. But this kind of market, it's extremely difficult to pinpoint where exactly the bottom of the market could be.
Yeah, well, certainly we'll need to talk about specific stocks as well, but before we do that, let's take it to our research team to try and talk about some of these. There are a bunch of stocks which are in news, so you got to monitor those as well. And then of course the views that brokerages have given out on Yes Bank would be important, and then we'll try and figure out from Avinash what to do with that stock too. So Nikki and Somit join in for that. Good morning, both of you. Well, I'll start off with you, Somit, because Yes Bank is just that much more important a stock. What is it that brokerages have said today?
Well, Axis Capital has come out with this note on both SBI and Yes Bank, and they're saying that the good part is that the Yes Bank saga has moved on quickly. Now, since the 81 bonds are written down and the new capital will be coming at 10 rupees per share, the loss on investment for SBI, if any, would be limited, says Axis Capital. Now, the write-down of 81 bond reduces the attractiveness of these bonds and will force banks to look for other avenues to raise funds. That is what Axis Capital is saying. And according to Axis Capital's calculation, they believe that the Yes Bank's total stressed book could be only around 45,000 crore rupees. The second one is from Ambit. Now, they have maintained the buy rating and target price on SBI at around 457 rupees. Now, SBI's capital infusion in Yes Bank is mere 1% of its current net worth. That is 2,450 crore. That what SBI Capital is, SBI Bank is going to put right now. Now, they're saying that the total investment by SBI in Yes Bank could be in the range of around 6,200 to 11,800 crore rupees, and the maximum impact on SBI if entire investment goes bad will be only 5% according to Ambit's calculation. Now, the contours of the scheme also show that the government does not want to put entire burden of rescuing Yes Bank on SBI, which is positive for SBI going forward.
Yeah, well, but the only thing is, I think brokerages are differing quite significantly. UBS, I think, for example, has discontinued coverage on Yes Bank. Credit Suisse, if I'm not wrong, has come out and said that they believe that Yes will actually go SBI's way, and therefore they've cut the target price too. So it's very chop and change. Let's wait and watch how these stocks react. Thanks for that, Sumit. Nikki, what about the other stocks in news?
Sure, I'm going to start off with Hikal, where the company has received, Mahad unit had received a notice from Maharashtra State Pollution Control Board for closure of the unit. This might have an impact. The company has already filed in a writ petition in Bombay High Court to stay the order. We're also looking at Natco Pharma, where one Form 483 observation has been received for its formulation facility at Kotak by US FDA. This seems to be minor in nature, given that it's related to equipment qualification, which the company feels can be addressed within a short period of time. We're looking at Novartis, where the company has received a demand notice to an extent of around 169 crore from Income Tax Department, given that the company has not deducted TDS on discount given to the stockist. The company has filed an appeal before the Commissioner of Income Tax for this. BPCL, where DIPAM has uploaded an EOI for selling government's entire stake in BPCL. Government intends to carve out BPCL 61.6% stake in Numalrika refinery. Apart from that, this will be carved out to a CPSE. In a bit of relief to the company, the Indian state-run entity in which government owns at least a stake of 51% would not be able to participate for this one. And also we're looking at IndianOpen Bank, where the board has deferred the fundraise meet in view of the current market situation, and has said that at this point of time it's presently adequately capitalized. PNB Housing Finance, which has received a downgrade coming in from India Ratings on NCDs to AA from AA+, saying that the kind of challenging environment that overall NBFCs have been facing right now.
Okay, thanks a lot for that, Nikki, and thanks for that, Sumit, as well. Avinash, how do you view Yes Bank and State Bank of India under the current circumstances?
I think clearly, SBI definitely would definitely be in for a fairly challenging period, considering the fact that one doesn't know what has been the kind of asset quality level which is going to be bad. I would believe that, Neeraj, both as far as SBI and Yes Bank are concerned, I think the markets would be clearly a little worried and look at fair amount of uncertainty as far as this deal is concerned. I would believe that unless and until we get some more data points, it would be a little premature to believe that this investment in Yes Bank could really be profitable in the near term. Our sense is that Yes Bank is a clear avoid, but SBI probably has factored in the negatives already in the price. I think the markets would be looking at incremental what kind of funding goes from SBI, because clearly whether the bank gets merged with SBI or whether a private investor comes in and probably provides fresh capital is now going to be the key factor which is going to drive the stock going forward. So markets would definitely not be happy if Yes Bank is merged with SBI, as it would be considered to be a forceful merger and definitely not a good development for SBI shareholders.
Okay. Let's also bring in our technical expert right now. It's good to get in a setup ahead of market open. Abhijit Phatak, director at Definedge Solutions, is joining us right on the show. Abhijit, the last entire week, I think for the week, the index closed below 2%. Do you feel that, obviously, today's session is also going to be a gap down open. What levels to watch out for then, and what kind of a trade to take?
Good morning. Yes, this is looks like a bad session going forward because SGX is indicating a big gap down. Only small consolation for traders is there is a, I mean, if you look at the SGX chart, it did not break the opening low which it made at 6:30 in the morning. So that is the low near 10,550. So any open near there can be used to go long, but only on an intraday very small pullback basis, nothing else. This is not a time to be brave in taking positional long trades, because anything can happen overnight, which has been seen over the last many days. So only if it holds 10,550, 10,600 in the opening half an hour, maybe a pullback, maybe up to 10,700, nothing more than that.
Okay, that's on the Nifty. Nifty Bank has been worse off compared to the Nifty in this last correction. Do you feel that there is more pain left for the banks?
I wouldn't like to catch a falling knife in Bank Nifty right now, because most of the banks have a horrible chart, including, I mean, the PSU banks, the private banks. So there is no point in trying to catch a falling knife. Even on an intraday basis, I would like to stay with Nifty.
Abhijit, just wondering, just that small clarification, that small intraday pull that you spoke about is for the day. The positional levels, do you reckon that from this 10,600 odd levels or 10,650 that the SGX is indicating, we are headed lower?
On the chart basis, 10,600 needs to be held on a closing basis for a few days. Bottoming out does not happen in a day or two. So it will create a base here. It will give enough time to enter. There is nothing like it will blast off 300, 400 points from today. So it will give time.
Abhijit, actually I'm asking, do you think we'll head lower from there?
Yeah, that's what I'm saying. So if it closes below 10,600, then yes, maybe even 10,300. And why I said 10,300 is that is a 200 weekly moving average. Historically, over the last 9 years, Nifty has taken support near the 200 weekly moving average, except for 2008, when it went well below that 200 weekly moving average. Every time we have bounced on the 200 weekly moving average. So 10,300 will be the place to look out for if it closes below 10,600.
Okay. That's on the index, the Nifty 50 there. It is still a very volatile trade to keep an eye out on, and how the equity markets and the indices move. But before we go on to Abhijit's stock ideas, we'll move on to our special segment, Bloomberg Edge, where Yash Upadhyaya tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. What's the stock today?
Morning, Devina. We're looking at Apollo Hospitals, and while this one has been an outperformer for a very long time, we've started to see some weakness come in. On a weekly basis, the stock has ended lower for 2 successive weeks, which is for the first time this has happened since November of last year, and the trender indicator suggests that there could be further weakness coming in. Now, like we always do, let's first try and look at what the trender indicator is and how do you interpret it. The trender is basically a Bloomberg proprietary indicator, and it basically shows you the relationship between the average true range and it helps generate a buy or a sell signal and also manage your stop loss. How do you interpret it? You go long when the trender line changes its color from red to green, and you go short when it changes its color from green to red. This color change takes place when the price moves above or below a critical level, which is the level of the trender line. And as we've seen with Apollo Hospitals, the green line over here, which has been in an uptrend since the start of the year, has finally been taken out because the price of Apollo Hospital has closed lower. In fact, we saw in Friday's day of trade that there was a big gap down opening, and then the price continued to remain below the mark of the trender, which is a strong indicator that there is substantial weakness in the counter. The volumes haven't been quite heavy, but we are starting to see signs of weakness, even the RSI giving a negative divergence. So multiple factors associating weakness with Apollo Hospitals.
And how well has this worked in the past?
Devina, all 4 times that the indicator has given a negative signal, it has worked very well. The average 1-month closing returns have been somewhere around 5%, and it could extend even further than that.
Okay. Yash, thanks a lot for that. That's Apollo Hospitals looking weak, but then you have a lot many more to pick and choose from in terms of weakness. What's probably a stock that you can trade on the positive, according to Abhijit, is Maruti, if it holds on beyond 60-100. Abhijit, let us talk about that call of yours on Maruti, as well as Sun Pharma, where you're positive.
Yes, this is purely a contrarian call, just because they showed less weakness on Friday, and like I said, they might not, it's a bit risky to be brave, but in case Maruti holds 6,200 at open and Sun Pharma holds 380, 385 at open, then one can try longs for maybe a 3 to 4% rise in the next few days. But the stop loss is extremely important, because the market can do anything. I mean, the opening and the low in the first half an hour is important.
Okay, so watch out for both of these names. It's a purely contrarian call because of the strength may not necessarily pan out this way. Maybe it'll be nice to get in Abhijit's view post-market open as well on some of these names. Now, you know, the other big discussion point today would be BPCL, and we would want Abhijit's view on that. But first, a quick fundamental view. This putting out the expression of interest, does it give a bit of a floor to BPCL? Falling oil prices should also benefit, in the truest of senses, even though the price on the pump has not been cut.
Yeah.
Would you believe that this gives a floor to BPCL or no, not quite?
No, I think clearly in terms of their raw material costs, crude prices coming down, Neeraj, it would definitely be at least near-term positive. And I think clearly in the near-term, markets would be looking at some sort of stability, whether these oil prices are going to settle down or further come off. Our sense is that it would definitely give a floor. At this level, clearly looking at the kind of network which BPCL enjoys, I would not be surprised that possibly we could get better deals, much higher than the current market prices, considering the fact that there has been a lot of interest from global, energy majors. I mean, the current scenario definitely looks a bit volatile, but our sense is that this is a very strong asset, and a complete sell-off definitely would mean that the government could also be able to mop up a reasonably good amount. So I think net, it definitely is a positive development that oil prices are coming off, but definitely around 350 to 400 could be a near-term kind of low price, for the bids for BPCL.
Viewers, please remember, we'll not get the details of who's bid at what prices, and also please don't start thinking about that. But Devina, the other thing, right, that they've asked, or they've left out the existing PSUs from participating, also removes, it's two things with one stone, right? You removing the overhang on some of the other PSUs, which the market in its wisdom believe might be asked to forcibly bid for BPCL. That's not happening. It's going to a large strategic investor and not an existing PSU name, which should also augur positively for those companies.
Yeah, which was obviously the concern that the government will take money from one pocket
and give it to the other.
Put it in the other. So that is now been put to rest, and this is definitely something that may be a positive for some of the other PSUs. So BPCL, though, had a brief period a few months ago when you did see the stock rally beyond 500, but the market conditions itself are not very conducive right now, and therefore BPCL itself and fell silent in the middle. Stock now at 403. We're about 3 minutes left to go for market pre-open. Just want to quickly look at the SGX Nifty once again. It's now not at the lowest point of the day. In fact, it's come off quite a bit. So 217 points under, 10,684 is where it's currently trading at. Remember, the lows of September 20th, 2019, the corporate tax cut day, was 10,891. So this is definitely going to wipe out all of those gains that we've seen from the corporate tax cuts. So all that money and the fiscal push that the government took probably right now are not really working in the favor. But Abhijit, let's talk about some of the upstream companies now and the impact on the back of Avinash on the back of the crude oil price cuts and how they will take it.
No, I think definitely, softer crude prices could obviously benefit companies like ONGC and Oil India. And our sense is that, typically, I think, that could definitely, be a net, negative, at least in the short terms. So our sense is that, ONGC, which has already been battered down very badly, and despite the fact that, markets were expecting a very liberal dividend, I would not be surprised that ONGC, Oil India could definitely be hurt more, because their profitability is to a large extent, dependent on rising crude prices. And this kind of fall is definitely going to be a kind of a shocker, at least not only for the fourth quarter, but even for the coming quarters. Hopefully, we believe that, let the crude price settle down. And I think if this is a short-term development, the markets could welcome it. But if it is a near-term kind of, phenomenon where crude prices would remain low for a very long time, that would definitely mean that upstream companies could get further derated.
Yeah, and that seems to be a bit of an overhang on these stocks as well. Important to get that view technically to Abhijit Phatak. BPCL might have a positive, the companies like ONGC are negative. On the charts, do they show that at all? BPCL some bit of a floor, or ONGC some bit of a resistance?
Actually, all the charts are looking bearish to me right now. In fact, BPCL is the most bearish chart because over the last 3 years, it has made a double top near 550. There was one top near 550 in the year 2017 and again in November 2019. So this kind of a double top formation is extremely bearish. Only consolation is it has a support near 360, 370 from where trading bounce is possible if there is some news flow. But for a long-term perspective, it is definitely not a buy for me.
Okay, 26 seconds left to go for market pre-open. It's not looking like it's going to be a great one. Currency, which closed at 73.78, saw a dip in Friday's session as well, about 0.5% plus depreciation. Let's see what this does to the currency as well. Remember, crude oil prices coming off should lend some support to the currency too, but we'll have to wait and watch. 10,684 on the SGX Nifty. There you have it, the pre-open at least. Very volatile, won't stick, but just keeping an eye out there, 10,759 on the Nifty. Sensex also very volatile. Coming to individual stocks, it's important to first pull up Yes Bank to see what that one's doing. The stock's down 10%, 14.5 is where it's trading at. Remember the swing that it took from levels of 6 rupees that it hit on Friday's session, finally closed at 16, and now another 10% lower. Opening again could be the case of Friday, where you have those lower circuits and then them opening up, and then piece by piece the stock going down further. Aside from that, BPCL is down 10%, ONGC is down 10%. BPCL I think was just now it's changed, it's down 3.5%. IndianOpen Bank is looking weak, Vedanta is looking weak, Tata Motors is down 6%, SBI is down 5%, so 257 on SBI. Mahindra and Mahindra, Kotak Mahindra Bank, 3% apiece. Axis Bank's down 2.6%. Bajaj Finance, that's now at 41.27. Ultratech Cement and Dalco, HDFC Limited is down 2%. Eicher Motors, Hero Motor Corp, GAIL, everything's down. L&T is the only one that's okay, just in the green. NTPC and Asian Paints. Asian Paints hasn't budged in this correction. This is probably one of the only stocks, along with Nestle, that I see has had a positive 7-day close, positive monthly close, positive 3-monthly close. There's no impact whatsoever on any of these stocks. The currency very close to 74 to the dollar right now, 73.99.
Yeah, well, this is interesting. Remember, we dipped sub 74 on Friday or Thursday's session and then came back quite strongly, but in today's session too, a bit of a dip. The yields would be interesting too. I think world over the yields are so low that I find it very difficult for Indian yields to move anywhere but lower, southwards. 6.08, it's still very high. Gives you a bit of a belief that there is some ammo in the hands of our central bank to go out and try and infuse some positivity. Just 3 or 4 names really. Watch out for Oil India. Watch out for HPCL, watch out for IOC. Those names would be interesting. Oil India down about 3% for now, but there is an overhang because of the crude price fall. HPCL, I think the overhang of or the falling crude prices, and I don't frankly know whether there is an immediacy to this, and then of course also get in Indian Oil Corporation. So I think the crude price fall helping. BPCL will be interesting to see. There are twin positives because of the crude price fall and the EOI, and let's wait and watch if the OMCs actually have a good day in the session while the other companies don't. And then, I mean, we'll wait for all of those companies on which there is a belief that the bond exposure to Yes Bank, the exposure to Yes Bank bonds might have an impact. So there's enough and more notes out, Indiabulls Housing, Max Financial, etc., and it'll be interesting to see what happens to those stocks. I think Morgan Stanley's note on Indiabulls Housing is pretty damning. Let's wait and watch what happens to these names. And of course, we'll mark the aviation companies too in a bit. But first, a quick perspective on Yes Bank too. We've already spoken about it with Avinash, but finally, as we know, the moves, the RBI has moved in to stop the contagion, and the SBHMN looks upon it as just that. The country's largest lender is going through Yes Bank's books right now and says it's still deciding on whether it will hold the 14% or no. What do analysts make of this and the possible fallout on SBI as well? Let's ask Lalita of Srivastava of Sher Khan, who joins us on the phone line. Lalita, thanks so much for joining in. Quick thoughts. Firstly, Yes Bank, I mean, if you have it in your coverage, then that, and if you don't, then just a gut on what this does for a Yes Bank franchise.
I think Yes Bank has already seen a lot of pressure, and I expect the pressure to continue. There is a support coming from State Bank of India in terms of fund infusion, the reconstitution plan that RBI is going to implement. But at the same time, I think, the troubles are far from over. You can see already your 81 bonds are written down. The net worth can also be significantly, or maybe all of that can be impacted. So I think negative for Yes Bank continues.
All right. What happens to some of the others now that we're talking about the kind of exposure that they have to those, tier 1 bonds, the likes of Indiabulls Housing, the likes of Max Financial? How negative is it going to be for them?
I don't have Indiabulls Housing on my coverage, so I'll not be able to comment on that. Max Financial, I think it will be fairly negative, not only because of their exposure to the bonds, but also they have a bank assurance tie-up with Yes Bank. Around 11% of the business comes from there. So that is also going to be impacted, a significant number. So I think negative for Max Financial also.
Is there a possibility that at least from the standpoint of investors' confidence in some of these banks that could be shaken about? Because the next one in line, which is seeing the brunt of the selling pressure, is IndusInd Bank, Lalita. So in light of making fresh investments into the financial sector right now, this is not the right time. What would you say?
See, my sense is that market always gives you opportunities. At this point of time, as always, you should always be going for stronger stocks which are, with a healthy balance sheet. So at this point of time, I think at least, bottom fishing in some of these stocks like Yes Bank and all can be counterproductive. So we don't advise that.
Lalita, one final question. What about State Bank of India?
I think there would be an initial drag on the State Bank of India performance as well. But then I think, they should be able to get it on their stride.
Okay. We'll leave it at that, Lalita. Thank you very much for joining us. So, and not probably the right time to go, take those risks and go bottom fishing in stocks like Yes Bank. Abhijit, comment on a few of these names if you do track them. One, Varun Beverages, the stock has fallen from levels of 850 to 750 now. And then a Relaxo Footwear, which has fallen from 820 to 675, if you track any of these.
Yeah, I do track Relaxo. I don't track Varun Beverages. But even Relaxo Footwear, the way it has fallen all the way from its all-time high above 800, it is not a very good picture on the charts. But it has support near 650, so one has to look out for some stability near there. And then maybe over the next couple of days, if it holds that support, then maybe it can be a good trading buy. But unless it crosses the all-time high, this is not a good chart for investment. Okay.
IRCTC, again, lower circuit on that one. It's 5% under in pre-open. I think that will be the case when it opens at 9:15 as well. So 1291. Affle Indush and IndiaMart Intermesh should pull up those stocks also to see, because they had also run up pretty significantly. So now Affle has come to 1571. IndiaMart Intermesh is still not fallen all that much. It's down about 1.7%. Avinash, what do you do with these stocks?
No, I think clearly as far as IRCTC is concerned, I think, this way the stock had actually moved up post the listing, I think clearly some amount of correction was anticipated. And I think, investors should realize that, fears about the coronavirus have been overblown. I would not be surprised that once, normalcy comes in, this is a company which is definitely not going to, have the capacity to withstand this short-term kind of issue. Our sense is that, levels below 1,000, Devina, could be a good entry point. And I think looking at the fact that most of these, price movements were driven largely by speculative volumes, I think you could see a lot of investment buying coming in around 1,000 odd levels. And I think, looking at the next 18 to 24 month view, the kind of growth which IRCTC can post out can definitely be a rock solid performance. However, in the short term, the stock is definitely going to see this kind of lower circuit, and that is definitely going to be not so good for the short term traders. But longer term, I think anything below 1,000 could be a good entry point.
By the way, 8 minutes have settled down, and lo behold, the one stock that is holding out is Yes Bank, up about 5.5%. The other one is BPCL, up about 2.68%. I dare say, let's also bring up Heikel and see what that is doing. Those are the three stocks that we highlighted today in our trade setup, and that stock is down about 3.5%. So the 2 or 3 names that should watch out. And at times of risk aversion, valuations don't matter, which is being now evident in companies like ONGC. That short-term impact that comes in because of the oil price correction clearly weighing in. Never mind what's happening to the valuations and how cheap it would be on a price to dividend yield basis. For now, investors are not prepared to hear any of those reasons, so do watch out for that one. Now, Avinash, I know Devina asked you about IndianOpen Bank. I'm asking this to you again. If you had to buy one large cap banking name currently in an SIP format, let's assume, which bank would that be? Would IndianOpen Bank form a part of that list at all?
No, I think
it wouldn't.
No,
so which one would it be?
I think I would stick to the old favorite, HDFC Bank. I think clearly in a market like this, Neeraj, it gives a lot of comfort, despite the fact that asset quality in the last quarter was a little increased. But overall, if you see the kind of the structure and the kind of business model which the bank has formulated, and despite the fact that the bank would be having a new CEO very soon, our sense is that this is a stock which investors could definitely look at accumulating on every dip and in an SIP mode. I think it gives a fair amount of comfort, considering the fact that the stock has underperformed, and in this market capital preservation is more important than capital growth. So I think in the near term this would be a better strategy. Stick to the well established HDFC Bank, which I think in the longer term could definitely give a decent risk reward.
Let's talk about some of these exhibitors, Inox and PVR. This is obviously a time-bound phenomenon. Once the coronavirus risks are out of the window, you will see footfalls coming back. And we spoke to the management of PVR also. Actually, they said that this is not going to affect them too negatively, and only if this extends itself will they be able to see a little bit of an impact. But for now, this is not negative for them at all. They are seeing consistent footfalls that are coming, and all dependent on the content. So Inox, which is now available at a price that was available 2 quarters ago, would you go ahead and buy it?
No, I think if your perspective is at least over the next 18 months, Devina, I think definitely managements have been clearly pointing out that it is a fear factor which is playing out rather than the reality. I would believe that as far as the content is good, exhibitors could definitely continue to see a decent amount of crowds to the multiplexes. Definitely, I think investors who have a high risk appetite should definitely approach these companies, because within this given market there are not many players who actually are present, and it's very difficult to actually replicate the success or the business model of these companies. So I think longer term these companies would do well. In the near term, I think definitely they could underperform.
Okay, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. IndianOpen Bank board defers meeting to raise funds in view of the current market conditions, says it's adequately capitalized at present.
India Ratings downgrades PNB Housing Finance's NCDs to AA from AA+ due to challenging operating environment for majority of NBFCs.
Indiabulls Housing Finance tells exchanges that it has an exposure to Yes Bank's AT1 bonds of close to 662 crores.
Natco Pharma receives one observation for its formulation facility at Kotak by US FDA. The inspection was conducted between March 2nd and March 6th.
Novartis receives demand notice for 169 crores from the Income Tax Department. The main contention being that the company had not deducted TDS on discount given to the stockists.
Antony Waste Handling Cell's IPO is extended till March 16, citing market volatility. Earlier closing date was March 6th.
Okay, those are unintended casualties of the market. I mean, I have no view on that IPO and the quality of the paper, but
one
with the
IPO that
market,
we should get a view on is SBI
Yeah.
cards actually in such an environment, and the listing that could get affected. What do
30
you
seconds.
think?
No, I think, Neeraj, definitely the pricing would definitely be impacted. But I think even if the stock opens near to the issue price or doesn't give a very significant listing price gain, I think this is a business and a franchise which is definitely going to do well. I think investors who have a long-term perspective should definitely use any dip or typically a soft price on listing should accumulate the stock. I would not be surprised that in this market you could possibly see levels closer to the listing to the offer price which has been offered around 750, 755.
Okay, Abhijit, Phatak, we would want your view on open on some of those contrarian calls that you've given, whether you're sticking to them or not, because we wise to do that then. But since we are less than a minute away from market open, can you tell us your top call for the day today?
Yeah, it will be Sun Pharma. Actually, I had a couple of short calls also, but looking at the gap down, it will be risky to give any short calls. So that's why I'm looking at a contrarian wrong call, and Sun Pharma would be the one which I'll be looking at.
Going long on a Sun Pharma, Abhijit?
Yes, we are going long on Sun Pharma with a stop loss below 385, and in the coming days, I expect it to go towards 420 if it holds 380, 385.
Viewers, keep that stop loss in mind. 385 is what Abhijit Phatak is saying is a stop loss for Sun Pharma, a target of 420. 19 seconds left for the markets to kickstart trade. We'll start off in the red. The Nifty is showing that already 250 odd points in the pre-open session. The question is, will we succumb to some more selling? Well, it's a question that I think time will tell. Europe opens negative, will have a further impact as well, and the Dow futures are anyways on a lower footing. But here's how we're starting off. You would say not too bad, looking at what Japan is doing, looking at what some of the other Asian peers are doing. Not too bad, but 2.5% down for the Nifty, 2.5% down for the Sensex. The Bank Nifty is down 3%, 870 points. I dare say 900 points now. Some of those volatile banks could probably be correcting, but let's wait and watch what is. The mid cap and the small cap indices just very quickly and how they are doing. 2.5% down for the mid cap space, the small caps about 1.3%. Let's get the heat map up on the screen, show you what's correcting and what's not. Well, for winners first, Yes Bank up 9.9%, 14% now, so big uptick from those levels of 6 rupees. I think it's gained quite a bit, or 6, 7, 8 rupees, whatever it hit. BPCL up about a couple of percentage points. Asian Paints, IOC, so obviously the crude beneficiaries are getting impacted positively. BPCL has the tailwind of the expression of interest being floated as well. But the losers, ONGC down 9%. Vedanta is down about 8%. Then the culprits for the Bank Nifty are IndusInd Bank, State Bank of India, Axis Bank. All three are down. ICICI Bank is down about 3.5%. I dare say it seems like HDFC Bank has done a bit of its damage. It's not correcting as badly as the others, but still down 2.5%. In fact, HDFC Twins are down in the session today. And then also watch out for Tata Motors. Every day, the price movement takes it closer to the 2-digit mark. So it's down about 5% again today. And big boy Reliance Industries upstream does get impacted. This one is down about 5% from a high of 1600. Reliance Industries is now floundering at the levels that it is at right now. Okay, very quickly, just the stocks that should be in focus, because almost everything else is in the red but for crude beneficiaries. But what about Oil India? What about HPCL? And those which get impacted because of the crude price movement should come up on your screen. Those are a couple of names that I would watch out for. And then, of course, watch out for the winners of the last couple of days. I think it'll be important to see what's happening to the specialty chemical companies as well. We'll get those going. Devina, I wonder if there are oil price beneficiaries in the green, and what else at the broader end of the spectrum?
So we saw Asian Paints up about 1.5%. Berger Paints itself is up in today's trade. Then let's also take a look at what Balkrishna Industries, Apollo Tyres, Fiat, and all of these tyre manufacturers are doing. So Balkrishna Industries is down about 2.5%. So not so much so in terms of reaction to some of these names, but definitely paint companies are the ones that are doing well. Indiabulls Housing Finance is now down 15%. They have an exposure to Yes Bank's 81 bonds, and the stock's down 14%, 662 crores worth. Kesoram Industries now become 25 at down 14%. Adani Transmission has moved lower. You've got the likes of Delta Corp, which is now at 109. Dish TV is become 6 rupees, 6.2 rupees. Then you've got Bharat Forge, which is down 6.5%. RBL Bank's down 6.5%. Parag Milk Foods 5.5%. Avanti Feeds is down 7.5%. Balram Puccini, PNB Housing Finance, Thomas Cook, everything is down. Tata Motors DV are also down about 5%. Equitas is down. Sadbhav Engineering is down 5%. Big cuts coming into the mid-tier space. Inox Leisure is down 4.5% as well. So now that takes it lower to about 340 levels. Suven Life, a lower circuit. IRCTC, lower circuit. And Divan Housing Finance for a change in this entire market move lower. Divan Housing Finance up until now was the only one that was managing to stay afloat, but that too has started to give up now. Remember, the talks of them starting normal usual business and operations had kept the stock active. What is doing well is HPCL, BPCL, Berger, we already spoke about that. Future Life is up 2%, Vodafone Idea is up 1.5%. Pidilite, and what a strong stock this one is, 7% higher in a falling market. That's some achievement. Ipca Labs, that's up, and some of the other pharma names, Natco Pharma, that also trades higher in the session. So these are the outperformers that you're seeing overall. Pidilite, quickly, Avinash, what's your take?
No, I think it becomes a big beneficiary of the softer crude price, and I think a very strong B2C player as well as a B2B player. So I think clearly the markets are rewarding the company clearly on the fact that crude could definitely add significantly to their overall operating margins and the profitability. So definitely I think one of the players which could be possibly be next to Asian Paints, which has actually stood very strongly in this kind of volatile market.
Okay, Abhijit, Phatak, quick opening thoughts on the contrarian buys that you gave, and if there's no call there, then a quick one on Reliance Industries.
No, in fact, both Maruti and Sun Pharma, the two which I gave, showed strength right from open, and Maruti opened at 6,300 and Sun Pharma at 395, and both are near the day's high today. So buying these on dips with a stop loss below today's low might work.
Okay, buying these on dips, mind you, keep that at the back of your mind. Okay, Avinash, Abhijit, gentlemen, thank you so much for taking the time out and being with us today. Appreciate your time. Well, we're probably not doing as badly as Japan is, but certainly in the red, 10,675. Harsha Upadhyaya, Chief Investment Officer at Equity at Kotak Mahindra AMC, joins us right now on the show. Harsha, good having you. Thanks so much for joining in. But a hypothesis, let's presume you had some bit of cash in your portfolio right now. Would you stagger out the deployment, or would you wait for an opportunity, or would you deploy it lock, stock, barrel right now?
We do have consistent inflows into some of our funds, and we have been gradually deploying that into the market. I think clearly a month back there was a bit of a concern in terms of the sharp rise that the Indian markets had seen, and hence the valuations, at least on the large cap segment, were kind of more expensive. Now with the sharp correction that has happened over the last 4-5 weeks, we have seen valuations correcting to more comfortable levels. So to that extent, not only in the broader market, but also in some select large cap areas, there is money to be made for the long-term investor. But volatility is going to be high. We have so many global negatives as well as local negatives. So to that extent, market is going to remain choppy. But if you are not looking at volatility for the next 6 months, and if you are investing for 3 to 5 years, I think there is good amount of money to be made.
What would the focus be then? If you want to make fresh allocations, you may have a few names that are those high quality names in your portfolio. Do you keep adding on to those names only?
It depends on where the valuations are. In some of those names, the valuations have corrected quite significantly, and if there is no long-term negative for those businesses, and if it's only a short-term volatility, then obviously we are adding to same names. And also we are seeing many other stocks where we had some intentions of buying, but they were expensive at that point of time. Now they are also correcting quite nicely. So those are the incremental buys that we may do in our portfolios. But broadly, I think we'll stick to our positioning, which is more of non-consumption oriented sectors, and wherever the valuations are in our favor, we will look at that and go on building the portfolio.
Any new themes that you've identified as beneficiaries of the current turmoil that we're seeing? And I'm alluding to the specialty chemical space, which has become top draw in a falling market right now because of the benefits that they get. Do you feel that that should be a part of the portfolio?
Yes, we continue to hold on to our specialty chemicals, not only from a raw material cost benefit perspective, but also I think over the medium to long term, there is going to be new opportunity that will come in terms of new businesses. I think starting with US-China trade war and now with the coronavirus spread, clearly the global majors are looking at alternate supplies to China. And India happens to be one of those regions where it can actually compete with China now, especially given that new manufacturing will have only 15% corporate tax. So overall, we will continue to hold on to specialty chemicals. But if you look at the global scenario today, there are two major benefits that have happened to India as an economy as well as Indian corporate world, which people may be ignoring at this point of time given the panic in the market. The first and foremost has been the fall in commodity prices, including crude. I think crude has almost fallen by 45 to 50% from recent highs. So that's a big boost for most of the manufacturing companies in India, not just the crude beneficiaries which are directly related to crude prices, but I think across the board manufacturing companies will have their fuel cost and manufacturing costs going down. So that's a benefit. The number two benefit is in terms of the lower interest rates globally and higher liquidity. I think given the sluggishness that the globe is seeing in terms of the economic growth, we are certain that the easy monetary policies across the world will continue. That also gives more room for our own Reserve Bank of India to look at possible rate cuts going forward. If you look at the 10-year yields today, I think it's at the lowest level since 2009. I think rates and commodity prices which are going down would be two big positives for Indian corporates as we go ahead.
And the fact that even crude oil prices coming off is going to be a net positive for us. Do you feel that the government has that much more ability to give an additional stimulus if and when required?
Very true. I think every $10 fall in crude improves our current account deficit by almost 50 basis points to the GDP, and we have already seen almost $30 of fall in the last couple of trading sessions. Not that the trend will continue or will remain at these levels, but wherever it settles, I think it's going to be much lower than the assumed price range for the next year, which is at about $65 to a barrel. So that will be a permanent positive for India, and that can be used to clean up our finances, which are anyways looking for some sort of a tailwind. And this is going to help government finances, as well as in case government needs to give any stimulus, I think they will have some ammunition left. At the same time, we are also not seeing any change in retail petroleum prices. There will always be a lag between the import prices and the local prices. So to that extent, I think government can also benefit if there is a significant fall in petroleum prices. Before it passes on to the consumers, they will be able to keep some money aside, which can be used to set right the finances overall.
Harsha, you reckon the developments over the weekend have contained any collateral damage that would have happened as a result of Yes Bank, or do you think that is still a bit of an unknown?
I think the volatility will still persist, but I think there is no issue with the stability of the financial system as such. Yes, there is going to be a moratorium for some more time, so to that extent the depositors may feel the pinch. Similarly, those who have banking relationships or those who are trying to raise money through additional tier 1 bonds could also face some issues. But for the overall financial system, I think this was something that had to be done anyways. We all knew that along with IL&FS, DHFL, etc., Yes Bank was also one of the overhangs that was there for Indian financial system as a whole, and that seems to be kind of getting stabilized now. So I think over a period of time, this should help calmness in the market.
Harsha, the other bit is while we all talk about the benefits of the falling crude prices to the economy and to companies, what about the upstream space? Now, the valuations out there compared to historical dividend yields, or however people want to calculate, are obviously a lot more attractive. But this is a bit of a new economic order as far as crude goes, and if indeed it stays lower, it could have a bit of a lasting damage on earnings. Would you believe that it's better not to bottom fish into the upstream space right now?
Yeah, as Neeraj, as you said, in some cases, price to earnings multiple is lower than actually historical dividend yield. So if you believe that dividend yield is going to continue, there is a lot of money to be made. But clearly, I think the profitability is going to get impacted, at least in the short term. So to that extent, very difficult to say that at what level some of these companies would stabilize. But outside the oil exploration space, there are a lot of other businesses, as we discussed earlier, which will definitely get impacted positively. And I think if the valuation is correct in those space, it would be better to invest in those pockets rather than oil exploration at this point of time.
All right. Not just oil exploration, Harsha. What's your take on investing public sector enterprises in general? Aside from the fact that they've been good dividend yield plays, they've not really returned much to the shareholder.
Yes, clearly our investment focus has been on public sector units which are fundamentally strong and which have been doing business in a reasonable manner. So we are not just looking at the valuation and jumping into some of these businesses, because there are various kinds of overhangs that are there, including further disinvestment or ESG concerns, etc. So I don't think one can take an across the board call on all public sector units, although valuations seem to be quite attractive. But it is beneficial to look at some of those public sector units where valuations anyways have been fair, but also the business seemed to be quite reasonable and quite steady. I think those are the names where you will be finally making money rather than across the board in our view.
Tata Motors is now at 108 rupees, so you're very close to slipping into the double-digit mark. Not that that has any significance, but I'm just saying, purely from a price watcher's perspective, that's a substantial downtake that has come in to that name. So do watch out for that. Some of the FMCG names like HUL, Nestle are holding out slightly better. The defensive bet coming in, so good going for those companies as well. But at the broader end of the spectrum, the damage that's happened to companies that had exposure to 8-even bonds of Yes Bank, and that's really palpable. You can actually see and feel the kind of pain that is there into some of those. Harsha, one final question really. A lot of people are talking about how our divided view on the export-oriented themes. View one is that it would naturally benefit currencies going down and exports would go up in the wake of China not being able to do that. But view two is also this: with the tightening credit conditions in the US, companies might be reluctant to spend, and therefore the case in IT is not as simple as it's being made out to be. What's your sense here?
Neeraj, I think clearly export segment is going to be quite patchy, and we'll have to be selective in choosing our companies for investments. I don't think just because China hasn't been able to export some of its exports, that benefit is going to straight away come to India. I think there are a lot of issues that Indian manufacturers will have to resolve before they can actually compete with China. Yes, in select segments we will be able to compete, we'll be able to offer the same quality, we'll be able to offer similar kind of supply chain dynamics, etc. But in many cases the vendors may not have been approved at this point of time by global majors. So just because there is a disruption, it doesn't mean that India will suddenly be able to start supplying to some of those global majors. So I think it's going to be a process rather than an overnight shift. But I think some industry segments, as I mentioned earlier, like specialty chemicals, were forecasting this kind of a disruption quite early. And those have prepared themselves to actually take a space in the global exports market. I think in those cases it will be much faster as compared to, let's say, auto ancillaries, where the vendors will have to be approved by original equipment manufacturers, and that process itself is very, very long. And also the capital expenditure that you do will have more gestation period as compared to, let's say, some of the other industries. So I think you will have to be choosing your businesses rightly in terms of where the benefits are going to be in the near term or in the medium term. And then if the valuations are on your side, I think that's where you'll be able to make money over a period of time.
Okay, got that. Harsha, it was great chatting with you. Thank you so much for joining us this morning.
Thank you. Have a good day.
You too. Markets, though, are not having a good day, at least at the start of it, 3% under. And the key culprit, I think, is Reliance Industries. It's down over 6.5%. Sensex also losing about 3.3%. Nifty Bank down about 900 odd points. The funny part is, that, when we look at the global equity markets, while India, including today's fall, is down closer to about 12.5%, 13%. US equity markets are down 12%. China's down just 4%. I mean, and that too, it's come, in the matter of the last 2 days. Prior to that, it was already at pre-coronavirus levels. So China has really managed to bounce itself back in literally a V-shaped recovery.
Yeah, it is looking like that. It's actually a different kind of a V as well, a straight line down and then a gradual slide upwards as well, but a sharp one at that. Yeah, Avinash point is well taken. By the way, just before we wrap up, keep in mind that the oil beneficiaries are doing very well for themselves. So it's not just BPCL and HPCL and IOC, but there is strength in Interglobe Aviation too, which is up about 1.5%. And strangely enough, companies like Shipping Corporation of India too are doing okay for themselves, up about 3.5%. Maybe the overhang of investing of some fashion, though SCI itself is a divestment candidate. I don't know if the market believes that it'll move fast on all of these. But, well, for now, we'll wrap it up on this leg of Indian Open from Devina and me and the team that has put this show together. Thank you so much for watching. Stay tuned to BloombergQuint for more news and updates.
According to a recent